Hello and welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, I'll take a look at the MACD, which is short for Moving Average Convergence Divergence. Let's go ahead and start with pulling up the indicator. You click on the indicator button, and you can do MACD, Moving Average Convergence Divergence. Click on that. And you can see the indicator pops up in this little window down here. So basically what this does is it measures when two moving averages are either converging or diverging. And what this shows is momentum. Now, there are a lot of different ways that traders will use the MACD. One, of course, will be like a moving average crossover system. So when it crosses down here, it's time to buy because it's oversold. When it crosses here, it's time to sell because it's overbought. That's the simplest way. But there is something called, go ahead and get a little easier look at this. There is something called divergence. So you can see prices clearly climbing here on the daily chart in Bitcoin. But notice how the histogram, in other words, measuring the distance between the two moving averages, is shrinking. And then eventually goes down here to the zero line. So it's no longer positively spreading out. So there's different ways you can take this indicator. That is a sign that there might be some momentum being lost underneath. The problem with divergence is it can go on longer than you anticipate. So typically, it just tells you that either it's time to get out if you're, say, you already bought Bitcoin, or that you need to kind of keep your eyes open. Another way that traders will use MACD is they'll just, once both lines cross the zero line, where the histogram disappears, and there'll be buyers or sellers. So above here, you'd be a buyer. Below here, you'd be a seller. That's probably the least likely or least common ways to use it, but it is one way that some people do. So the first thing that I would tell you about MACD is you do need to see some type of trend. And generally, it is used in concert with something else. So, like here in the poly, you can see that the histogram's getting pretty red, pretty deep. You break support there, then it kind of ties in together. You maybe get out there as the moving averages cross. Again, MACD isn't necessarily a primary indicator. It's a secondary indicator. First thing is first. It's always support resistance. And then you'll learn candlestick patterns a little later or candlestick shades. And then you can see something like the MACD as like more confirmation. So notice how, let's do Ethereum. Notice how, the market goes green, red. So positive, kind of getting noisy here, these two moving averages. Goes positive again, goes negative. That just tells you whether or not the moving averages are spreading out. It's by itself, it's not necessarily a buy or sell signal. But you can see that it topped out and started shrinking around there, and we did pull back. Right as we got to the zero line, we crossed again, which was right about there. So you could have used those. Typically, what you want to see is like an extraordinarily overdone move. So here's a good one. You can see we had a cross right there, and then we started going to the upside. So that's all a buy on the dip with the cross. Furthermore, notice how it happened at a previous resistance area, now offering support. So those are some things that you might want to take a look at. I'm going to go ahead in this next video and show you multiple ways how you can use the MACD like in real life trade scenarios and perhaps either catch the end of the move, the start of the move, or get a little heads up. Maybe it's time to take profits.